right. In the previous lecture, we talked about candle. We talked about engulfing harami and today we are going to talk about doji. Right now, what is the doji? There's we have different kind of doji candles in an actual forex chart, right? An MT4 forex chart or MT5 forex chart. So there are 4 types of doji candles, all of them being one candle formation. So all of them forms in the same way, but have their differences. Right? So the key features of this type of doji candle is that the open and close price are the same or very close to being the same. For example, it's more like many people call it indecision candle, right? So the body of the doji will be very narrow. As the candle opens in the same place, it closes. Most of the times we see all those things in the chart, but I'm going to show you that with an actual screenshotted chart example, so you can see what I mean by doji, different kind of doji. So we have four type of doji, and the difference between those doji is that the upper and the lower wicks are lengthy. So the distinction between different dojis come in the length of the upper and the lower wicks. Right, so the difference between those doji candlesticks, I said we have 4 different types. It is the wicks, the upper and the lower wicks, and there is a candle called a doji, and the others are variation of that main formation. In the sense that there's a candle called doji candle, but we still have the similar ones that looks like it, which made it 4 types. We may even have more than 4 or 5 or 6 types of these doji candles, right? Okay. Now, let me explain the doji and the types of doji we have. Now, the main doji is the length of the upper and lower wicks will remain fairly small as the market has lost the momentum. It's lost its momentum. It recently had. So, if market is in a movement, maybe a bullish movement or a bearish movement, and later, tend to have slowed down the movement it has, we may tend to see a doji candle. So a change in direction often follows this reduction in momentum, right? I know you guys will understand what I mean by momentum, the movement, a pull movement in the market. So a doji is only a valid candle formation when it appears at the top or bottom of the market move, right? Now the second type of doji candle we have is long-legged doji candle. So the open and the close are at the same price, but the upper and the lower wicks are very long. Most of the times we see this kind of candlestick inside a chart. So this is the period of indecision. So we call it indecision candle. When you see such candle in the when you see such candle in the market, you call it indecision because you don't know the direction the market will move. You don't know if it's going to be bearish. You don't know if it's going to be bullish. So the period is indecisible. So you can when you see such legged doji candle, it's indecisible. But at the top or bottom of the trend, the temptation for markets to reverse is very strong, as I've just said before. So the third one we have gravestone doji. So in this gravestone doji with a long wick, the open and the close price of this doji are at the bottom of the candle. It is a great formation denoting the end of the uptrend, but because you can see that rarely. Maybe on a high time frame, you can see that rarely. It rarely occurs on a higher time frame. It rarely occurs on a lower time frame. But I'm still going to show you guys an example on an actual screenshot chart, so you can understand what I'm trying to say. Understand this long English, that we are seeing on the screen. So this gravestone doji is also called pin bar, but we have a lot of pin bar. People call different kind of candle pin bar. We have some pin bar, different kind of candle names we have here. But the most important one is to pick up the important candle patterns to note what you want to do in the market. All right, the last one is a dragonfly. We know about dragonfly doji candle. So this is the opposite of the gravestone. So the gravestone has the long wiki and the candle tends to close at the bottom, but the dragonfly has his own wiki. The candle tends to close at the same open position at the top, at the same open position. It's still called pin bar by the Western chart techniques. So if you make a research on these candle patterns, you understand more of it. Now let us move into the actual chart for me to explain, for you to see what I mean by doji, long-legged, gravestone, and dragonfly. All right, here is it, guys. So this is the original doji candle. This original doji candle. So other ones are similar to it. Now this doji candle is a small candle stick. You see, a small candle formation that opens above, come down again, opens below, and close in the same position. I'll close in a similar position where it opens. It's very small, right? And it happens either between the downtrend or uptrend. That is what we call indecision. When the market is selling, you see this doji candle. Whenever the market is buying, you can see this candle formation. It can be downtrend, it can be uptrend, it can be, and it can lead to up movement. It can also lead to what? Down movement. Now this is the long-legged doji candle, which we have the long wick and long. So the market goes up, comes back again, goes down, come back again, and close either the same place it opens or does a similar spot, maybe a few price away from where it opens. So this can also lead to bullish, or this can also lead to what? To bearish. Now we have the gravestone doji candle. So this candle appears when we have a bullish trend. So on a market, when it appears on a bullish trend, which will certify or give you a signal for a downtrend, a short downtrend, not a full downtrend, a short retracement in an uptrend. Now we have a dragonfly, which I've explained previously, that is the opposite of gravestone. Dragonfly is the opposite of gravestone. So here is the same thing. Market on a downtrend, when you get this, it will also push up. It will also trigger a bullish trend. So in all this candle, we have the bullish movement. We have the bullish movement here on this kind of candles. We also have the bearish movement in this kind of three candles. All right, let us move to the screenshot. Let us move to the next slide so you understand what I'm trying to explain. Now here is it. This is a bearish doji candle. So in this bearish doji, the market is in upward movement when you have a bearish doji, which is a blue. It all depends on your candle pattern, right? Sorry, our candle color, not pattern, guys. It all depends on your candlestick color. So if you tend to produce your candlestick as blue or white as a bullish and differentiate your red from the bearish one, it's all left for you. But here, the bullish is the blue one, and we have a bullish doji here, which triggers a sell movement, which we call a bearish doji. Don't get yourself confused here. Let me explain again. When the market is bullish moving and you have a blue doji candle, expect a bearish movement, a sharp bearish movement that will cover at least 50% threshold of this bullish candle. Let me not move into price action or dictation or ICT market here. Now we have the bearish long-legged doji. This is how the long-legged doji looks in an actual chart. When you check your chart on time frame, on any time frame, you can sense this, you can see this. It appears most times, and this one too appears most times. This one too appears most times. And this is a doji long-legged doji, a long wick up and down. Now we have a gravestone doji. See that? As I explained here, a gravestone doji, which is more likely like this. The market goes up bullish and later drop back down and closed at the same position where it opened, right? The same time, so the market sold, sell, and pull back up again and close where it started, or close to the price where it started. Now this is something applicable to the market went bullish. This is a bullish move. This is a bullish move. The market went up and came back and closed where it started, or closely where it started. Because of I guess this should be a fundamental trigger. Yeah, that is news trigger that's propagated this movement in the market. This is a gravestone doji. Now we have a bearish dragonfly doji. This kind of doji is when you see kind of doji, it triggers a sell move. This which I explained here. The market can be on downtrend or uptrend, and then you have a bullish or bearish movement. So here we have a bearish movement, a blue dragonfly, which triggers a bearish movement. Why? Because here the market sold. Here now went back up again and closed where the price was started. It's something applicable here. The market bought, came back again and closed where it started, which triggers a bearish movement. Now this is for a bearish doji in the market. Let's switch to a bullish doji in the market. Now here's a bullish doji. You see, so the clear expression I did now was this doji candle. If you check the bearish one, it was blue. Then if you check the bullish one, it was what? Red. That is, it was the last doji candle we see here must be red for you to enter bullish. And on the bearish movement, the last doji candle you see, the last doji bullish candle you see and an uptrend can trigger what? A bearish movement. Right now, let us talk. This is the general doji candle we know, and this one has the types as I explained in the beginning. Now, bullish long-legged doji, this is how it looks like. Right, it appears build on a downtrend. Then what happens? It triggers up. Bullish gravestone, it appears like this on a downtrend. What happens? It triggers up. Bullish dragonfly, it appears like this, pull up. Next thing we have what? A bullish move. But before you have a bullish move, make sure the last candle closes above all this bullish dragon doji candle. Then you can now trigger for your entry as it goes. So that is that about this bullish doji candle. So any other thing you want to know about doji candle, you can take your time, maybe make a research. But these are the simplest way I can explain this, so you will be able to follow in the next lecture that will be coming up. So let me rephrase again. The doji candle, we have this normal doji we see in the market. We have long-legged doji, we have gravestone doji, we have dragonfly doji, and inside all these doji, we have the bullish doji, we have the what? Bearish doji. So this doji occasionally appears in the market where you see this kind of thing. When you see this doji on a bullish trend, on a bullish movement, so you can trigger what? It can trigger with a bearish movement. So you can search or see this doji in a support or resistance zone, or in a demand and supply zone, or on a trend line. So if you are good in drawing trend line, which I've lectured on how to use trend line on my video, you can search my YouTube channel or check the link below this video to go to my channel and search for trend line trading. So you can see this kind of doji on a trend line. You can see this kind of doji on a support and resistance zone or mitigation areas. You can see this doji on in another block movement that came to retest or something like that, and so on and so forth. So that is that about doji. All right, thank you guys and God bless you. This is ZagaTechFX. Don't forget to subscribe to my channel. Don't forget to like this video. Don't forget to give me thumbs up and share this video to your friends that wants to learn more or have knowledge about candle patterns. These candle patterns help so much in forex trading. It helps you to make it makes you to make reactive decisions in the forex market. When you see such, you can at least make 10, 15 or 20 pips in the market and leave the market, because you don't stay in the market for long, except if you're a swing trader. And you can, as a swinger, you can see this on a resistance zone or the swing zone, or you can see it on the demand or supply zone. All right, don't forget to subscribe. ZagaTechFX, love you. Bye for now. Peace.